This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Singapore. Your top stories this hour. Asian stocks primed to join a global equity rally after a cooling labour market and tame CPI print reinforced expectations for a Fed cut next week. Microsoft and OpenAI reach a preliminary agreement about the structure of their partnership, paving the way for the startup's plan to become a more traditional company. Plus, Hyundai says its battery plant in Georgia is being delayed due to labor shortage following a U.S. immigration raid.
Take a look at how we're shaping up in the Asian session. Of course, we had already seen multi-year highs for Asian stocks. In fact, the Nikkei and the Kospi at fresh highs. The Japanese yen trading within a narrow range. In the overnight session, we saw some of that recouping of losses against the U.S. dollar, but still sort of lagging G10 peers. Despite this, that we have a softer U.S. dollar, which has propelled the offshore yuan as well. We're at around that 7.11 level against the U.S. dollar. But it's really that narrative about Fed rate cuts to come. Because on the overnight session, we already had inflation data coming in line broadly within expectations, not a huge spike in prices. But on the other hand, we did see some more signs of a softening labor market. Take a look at how U.S. futures are setting up, because we have seen those record highs, a broad lift, especially with value stocks leading the gains. We also had bank shares leading the Dow higher as well. At the moment, unchanged, but NASDAQ 100 futures at that 24,000 level already. But really, it's about what I mentioned when it came to that Fed rate cut expectation for next week, because we did get jobless claims numbers jumping to the highest level in 4 years. Usually a noisy data set, but the fact that we got this week's downgrade of annual employment, not to mention last week's poor non-farm payrolls, all setting up a different dynamic, and the focus now more on the job market softening. Crude prices at the moment down towards that $62 a barrel level, Avril, because we also saw those energy shares being pulled down. We have more expectations of a bigger surplus when it comes to oil next year.
Yeah, surplus and lack of demand also makes you wonder, as you say, the Fed's rate cut path, not just about next week, beyond that, what this means for other central banks. We've just gotten the likes of Peru, and by no means this was an expected decision, cutting by 25 basis points. Economists were essentially split 50-50 on whether we were going to get a cut. But it does seem like the data overnight from the U.S., along with the firmed up expectations of what the Fed is going to do, perhaps giving central banks globally a bit more confidence on rate cutting. So we're seeing this level at 4.25%. It is a 3-year low on Peru Central Bank's benchmark interest rate. Now let's bring in Carol Schleif, Chief Market Strategist at BMO Private Wealth, for an analysis on the Fed's path. So, Carol, as Shery was just highlighting, is really about the path of the Fed. We had an inflation number, 0.4% on month, maybe higher than the prior reading, and, you know, some consensus estimates. But all in, this clears the path for the Fed, especially when you take it along with the jobless claims. What do you see the Fed's path looking like?
Yeah, we really do think, and markets are clearly telling you they think the Fed has not just one cut up its sleeve, but multiple cuts. And I think that had been the biggest question after Jackson Hole was, would Chair Powell in the press conference next week and perhaps in the press release indicate that there was room for more than one cut? And the interesting thing is markets all week have been on tenterhooks trying to make sure that the economic data and the employment data, the revisions we knew were going to come, we figured they'd be big. And the market was waiting for, are we going to get the right mix of just enough or inflation that's flattish enough to allow the Fed to cut, but employment that's soft enough to indicate, again, that the Fed can cut not once, but multiple times. But when all is said and done, the bottom line is we still want an economy that's growing and growing reasonably. So it's sort of looking for that Goldilocks. And I think markets are acting like it all came in just right this week.
All just right, and these stock gauges at all-time highs. Do you see that as broadening out beyond tech to cyclicals, small caps even?
Yeah, it is interesting. You've seen the small caps behave very strongly ever since Jackson Hole in particular. They still haven't erased they're a bit behind the broader averages or the bigger cap averages year to date, but they've really definitely scrambled to keep up. And you also saw a lot of industry participation as well. today and this week. But the interesting thing is, too, is markets are keying in on, we've had some very good announcements about demand and AI use and things like that out of several large tech companies this week. So you've got parallel themes that are going that are pretty supportive of broader participation in markets, which you really need for markets to continue and sustain. You need that broader participation.
Yeah, especially given how valuations are so high, especially when it comes to the tech sector and how they power the broader benchmarks, right? Still, do you expect to see more gains when the optimism is there about the exuberance of AI investments?
We think you'll see more gains, particularly as markets broaden out, but we wouldn't be surprised to have, it would be very normal to have some interim pullbacks in here, not necessarily pullbacks like we had in April around the tariff issues. But, you know, we've been advising investors all year, number one, to stay diversified. Two, as you get these run-ups, you can easily trim in some sectors and refocus other places. But overall, the bias is towards growth, and we also encourage investors to continue to focus on the fundamentals and pulling those through. They've been very strong, even taking the Mag 7 out of the earnings. When all was said and done in this most recent quarter, you still had aggregate earnings growth of around 6%, which was substantially higher than people thought going into the quarter. And it's the third consecutive quarter overall of double-digit gains across the industry. So you've got a strong economic fundamental underpinning, pretty broad spread to help support markets.
What does that mean for the U.S. dollar? Because it's been trading largely sideways and not necessarily moved by Fed dynamics, but what's happening on the other side of that trade, whether it's UK gilts, what's happening in France with the budget, or here in Japan with the elections as well.
Right. I think you have to look at the dollar not just in the year-to-date or in the last year or so, because many of our currency strategists at BMO were saying coming into the beginning of the year that the dollar had pushed so far that it was somewhat overvalued and ready to come back into a more normalized range. And when you look at it on a 5 or 10-year basis, the dollar's had a lot of strength and supremacy. But you would expect a weaker dollar with the Fed starting to cut and interest. But you've got banks, many central banks around the globe having already cut more substantially than the Fed does as well. But what we're going through, whether it's trade and tariff policy or geopolitical policy, you're basically going through a global rebalancing where investors are looking at, do I really want everything in the U.S. or do I want it more spread? And bringing the dollar down somewhat, some of that too is the other relative currencies moving up. So you've got a rebalancing going on, and it can be, that's where part of what the theme we've been trying to pull through for investors is focus on that long term and where global markets are trying to get. And we still think that growth bias around the globe is going to be intact.
What is this going to mean for the relatively popular curve steepener trade? We're seeing the 10-year nudging towards 402.
Well, in the U.S., logistically, we love it that the 10 years is nudging down some, because that translates pretty quickly into our mortgage markets. And as in many parts of the globe, but particularly in the U.S., we've had a pretty broken housing market for a long time, but particularly from a pricing standpoint and affordability standpoint. So bringing that 10-year down some really does help. And the interesting thing is you got the short ends following monetary policy, the longer bonds looking at fiscal policy of a lot of these governments. And so you've got that steepener, and the 10-year as the fulcrum has to sort of decide, if you will, on a day-by-day basis which way they're going. But for now, the 10-year seems to be implying that growth will be okay. The Fed can bring rates down some with setting aside all of the geopolitical or all of the political angst that surrounded the Fed. And there's legitimate reasons for the Fed to bring that higher real rate, or their higher neutral rate, if you will, back down a bit.
Carol, great to get your analysis. Thanks so much. Carol Schleif is Chief Market Strategist at BMO Private Wealth. Now, as we've been seeing all-time highs on these gauges in the U.S., as the Fed's path looks pretty clear, AI has been powering this. Worth noting that we've been seeing volatility slipping. And against this backdrop, some think that it makes sense, especially in the month of September, to do a bit of hedging, especially given how this month tends to denote some seasonal weakness. If you take a look at this chart on the right of the screen, it'll show you indeed how the cost of hedging a drop in tech stocks is rising. So a rise in the skew. And of course, one tech stock that we've been watching is that of Microsoft. OpenAI and its largest investor, Microsoft, have agreed or reached a preliminary agreement about the structure of their partnership. Let's bring in our Asia Tech correspondent, Avril in Hong Kong. Belle, put things in perspective for us.
Yeah, well, this is actually quite a significant move, and I think you can see it reflected there in the shares for Microsoft. But what we know is that OpenAI and Microsoft have signed a MOU, or a Memorandum of Understanding, on what will be the next phase of their partnership. So a new public benefit corporation is going to be created. That's a PBC. It's important just to make some nuance here. It's not like a traditional corporation. A PBC still needs to balance making money with also more corporate social responsibility goals as well. But OpenAI is going to be investing $100 billion into this PBC. And we've spoken with sources, and we understand as well that maybe $100 billion could actually sort of be the floor, that amount could increase moving forward, but it is about 20% of the value of OpenAI today. So Microsoft and OpenAI, I mean, they've been holding talks for months essentially on what structure or partnership, or what the partnership could look like moving forward, given you've had that sort of perennial issue for the company OpenAI. That for-profit, non-for-profit structure has been one of the reasons, for instance, we saw that leadership tussle at the end of 2023. But it seems like, as I said, investors do like this step, this shift or creation of a PBC, and that's why we're seeing that move in Microsoft in after hours as well. But the statement as well, to reiterate from OpenAI, I mean, right at the top, they say that they were created as a non-profit and they intend to keep that non-profit structure moving forward as well.
And also we have big moves from Micron. What are the details of that story? Because analysts seem pretty optimistic about this stock.
Yeah, it's really one analyst in particular that sort of caused this really big move. I mean, it was the biggest gain we've seen for the stock in 4 months, but it was after an analyst upgrade from Citi. So an analyst there, Christopher Danley, he raised the price target for Micron to $175 from $150. And that really does come down to his expectation of what we get later this month. So the company's going to be reporting earnings in about 10 days from now, on September 23. And what he's expecting is for the company to offer a very bullish forecast. He says a bullish forecast that's actually well above the consensus right now on Wall Street. And it's looking particularly at data center revenue. So Micron has been seeing really strong demand for its products. I mean, it is the largest maker of memory chips in the US, but it's been focusing on that very lucrative HBM, or high bandwidth memory segment in particular. And so its stock, I mean, it's really benefited from that. It's up more than 80% year to date. But importantly as well, it's actually the best performer in the Philadelphia Semiconductor Index as well. So yes, big move for Micron, has been moving across the course of 2025. And it really does come down to those earnings, as I said, September 23. So just in the week after next.
Unveil Jewelers there with the latest on the tech sector. And coming up on the Asia Trade, BNY tells us where they're seeing opportunities for wealth creation in the APAC region. We'll get 10 caps Fed cut bets after relatively tame inflation reading from the U.S. And Diana University weighs in on how Washington's immigration stance is testing ties with South Korea. Much more ahead. This is Bloomberg.
A day after the fatal shooting of conservative activist Charlie Kirk, a manhunt is still underway. The FBI has released photos of a person of interest to the public. Meanwhile, President Donald Trump says he will attend Kirk's funeral, which is being planned for next week, and also intends to posthumously honor him with the country's highest civilian award.
I'm pleased to announce that I will soon be awarding Charlie Kirk posthumously the Presidential Medal of Freedom.
Let's bring in Bloomberg senior editor Kara Wetzel. Kara, what's the latest on this?
Well, yes, as you said, the manhunt is still on. There has still been no suspect apprehended. Police released a photo of a person who they say appears to be a college-aged male. The photo shows him in a black cap, shirt, and sunglasses. And police have detailed some of his whereabouts, that he was on a building and appears to have escaped into a wooded area near Utah Valley University where the shooting took place. They've recovered what believed to be the rifle used in the attack and other evidence, including footwear and impressions and palm prints. But right now, they're seeking the public's help. They're offering a $100,000 reward for information. And at the same time, urging caution against speculation. There has been yesterday, two people whose names were publicly circulated, and given sort of the heightened emotions and the social media interest in this, I think everyone's approaching it with a lot of caution.
Yeah, and the political response really coming from across the spectrum at the moment. What's been said so far, and any action taken as well?
That's right. I think many leaders, both on the Republican and Democratic side, are, of course, denouncing the political violence. There is a sense of fear, I think, sort of permeating among, congressmen. There's reports of, heightened security. And for the Trump family in particular, and within the White House, it seems to be very much a personal event because they were quite close to Charlie Kirk. He was more than just an influencer. He played a major role in the White House. Don Jr., the president's son, posted how he felt like Kirk was a brother to him. And J.D. Vance also had a long, elegant post about Kirk's role in his life and in helping him in his political career. And so Vance today went to Utah and has accompanied Kirk's body with his family back to Arizona.
You highlight his influence, particularly among young conservatives. What other implications are we seeing from this?
Well, it's quite unfortunately the latest escalation in political violence in the U.S. We had the two assassination attempts against Trump last year. We had the horrific shooting of a Democratic lawmaker in Minnesota in June, arson attempt against the Pennsylvania governor. So it is really, quite a heightened, blatant political assassination, frankly, that has caused a lot of worry about the heightening divisiveness and violence in American politics. So, obviously on social media, a lot of this has played out, through the gruesome video of the shooting and speculation and things like that. But most leaders are, trying to sort of calm tensions down and denounce this political violence.
Bloomberg senior editor Kara Wetzel there. We do have more ahead on the Asia trade. This is Bloomberg. Mexican President Claudia Sheinbaum is defending her push to impose new tariffs on Chinese imports, insisting the move is to protect domestic industries. China warned Mexico to think twice before hiking duties, accusing it of trying to appease the U.S. For more, let's bring in our chief North Asia correspondent, Stephen Engel. Steve, a tough situation for Mexico with its neighbor to the north really pressuring it for more action against China. But what's the latest on this bat?
Well, obviously, Beijing is fighting back. The Ministry of Commerce putting out some statements. I'll get to those in just a second, but let me give you a brief roundup of where the issue is right now. Yes, the U.S. and Mexico are in the middle of talks right now. I mean, those two neighbors, big trading partners, obviously. Sheinbaum wants to not only stand up to the United States, but also is very reliant as well on the United States for two-way trade. And the argument that Sheinbaum is making Beijing as far as proposing this up to 50% tariffs on goods with countries, mostly Asian countries, China, South Korea, India, and others, that they don't have a trade pact with, would basically hit about 1,400 different categories of goods, including cars and most notably EVs, also auto parts and steel. Keep in mind, Mexico has replaced Russia as the top destination for Chinese exports of cars, rising nearly by a quarter, 25% thereabouts in the first half of this year. So it's raising some concern about protecting local Mexican industry. But of course, China sees it a little differently. They see it as Mexico appeasing Donald Trump and his push, obviously, to get other nations to act out and add their own tariffs on China. So again, this is a bubbling story right now that we'll have to see how it plays out. The Mexican economy minister, who is in charge of external trade, essentially says cheap Chinese-made cars are distorting the local economy. So that's going to be the narrative that the Mexicans are going to be portraying.
So how has Beijing responded? How strongly is it lashing out, Steve?
Yeah, pretty strongly from the Ministry of Commerce. They have mentioned the United States by name. They've mentioned the word that they've used repeatedly, and that is bullying. Let's just bring up a statement here. They're basically saying they're warning Mexico to exercise the utmost caution and think twice before enacting these tariffs. But here's the nuts and bolts of it. In addition to opposing all forms of unilateralism, protectionism, and discriminatory or exclusionary measures, they go on to say, at a time when tariff abuses by the U.S., yes, they named the Americans, have triggered widespread opposition across the globe, any unilateral tariff move by Mexico, regardless, by the way, if it's under the WTO guidelines or not, would be regarded by China as an act of appeasement and compromise towards unilateral bullying. This story is not going to end.
And we will count on you for keeping track of it for us. Steve, thanks very much. Chief North Asia correspondent Stephen Engel. Now, amid these tariff headwinds for China, Bloomberg has learned that China is considering asking state lenders to lend to local governments so they can pay unpaid bills owed to the private sector. Some estimates put the amount of unpaid arrears at more than $1 trillion. Sources say the amount of money under discussion would plug at least $140 billion of debt in the first phase of a longer-term initiative. Also on trade, Commerce Secretary Howard Lutnick says the U.S. is on track for new trade deals with Taiwan and Switzerland. He added Washington will sort one out with India if it halts Russian oil purchases. He confirmed South Korea has reached an agreement but has not yet signed it. Lutnick's comments mark a more upbeat view on President Trump's trade agenda as tariffs weigh on firms from Swiss watchmakers to Taiwan's chip makers. And President Trump has asked the federal appeals court to pause a lower court decision blocking his ouster of Fed Governor Lisa Cook. The request for a stay order would likely allow the firing to take effect before the appeal is formally heard. The administration wants a ruling by Monday, the day before the Fed board starts meeting to lower interest rates. If the request is denied, Trump is likely to go to the Supreme Court. More ahead on the Asia trade. This is Bloomberg.
I still see very strong pipelines. I see high level of engagement from clients. I see a sense of urgency as well, given the speed with which industry structures are changing, and there is still growth opportunity. I think growth will be a notch lower. We're keeping an eye on the labour market. It's a low churn market. So not everything is rosy, but we don't see a recession on the horizon.
Citigroup CEO Jane Fraser speaking exclusively with Bloomberg's Jumana Borsechi. It comes as Citi strategists issued a call saying equity markets should continue to deliver upside over the next few months, especially in Europe and Japan. Citi sees two potential scenarios ahead, either a soft landing underpinned by Fed easing that would broaden gains in stocks, or more economic weakness that could lead investors toward a growth is defensive sort of playbook. Take a look at how we're setting up for the Asia market session, because we're seeing Nikkei futures pointing to the upside after already stocks saw record high. Same with the Kospi. You can see Sydney futures also gaining 0.5%. And this coming at a time, as I mentioned, of course, that economic data out of the U.S., which really led to a broad lift in equity markets across the U.S. We're talking about all major benchmarks finishing at fresh highs. U.S. futures unchanged at the moment, but we saw some of those value stocks leading the gains in the overnight session. Bank shares also powering the Dow. Really that focus on the job market and perhaps some softening of the labor data that we saw in recent days. Joining us exclusively is Jose Minaya, Global Head of Investments and Wealth at BNY, where he oversees more than $2 trillion of client assets worldwide. And it's great to have you here in the Tokyo studio.
It's good to be here.
You come at a time when we continue to see these record highs around the world, whether it's here in Japan, across Asian assets, or over in the U.S. In this environment, how do you build wealth and hedge for potentially volatility ahead?
Yeah, it's pretty interesting. Look, obviously, these markets have been very constructive. We've been calling it from the beginning of the year. We thought the S&P would end up in the 64 to 6,700 range. Here we are. That's looking closer to our top end. A lot of it driven by earnings, right, and strong fundamentals. A lot of it driven by fiscal easing, and that's going to be constructive to the markets. Yet, there's a lot of noise out there, right? So what people are getting used to is, yeah, these markets continue to rise, but in terms of uncertainty, policy risks, we're probably at an all-time high right now in terms of things that could potentially go wrong. I think the market's kind of really powered through that pretty well, but the issue today is we talk to clients is, as we said from the beginning of the year, you don't go risk off here, but you do have to kind of think about what risks are you taking. It's more about what are your outcomes, what are the solutions that you want versus what particular group or stock you're going to buy. It's how do you now construct a portfolio? How do you think about balancing those risks?
So how do you do that? Because we have seen, for example, sectors that have lagged broadly this year, value stocks, for example, gaining ground because of these expectations. Do you reallocate some of that positioning, or where do you focus more on?
Look, I think a lot of it is how you kind of deliver these solutions, right? Because for us, alternatives have been a pretty hot topic, and for a long time, it was the academic conversation was one of you want to have good correlation in your portfolios. You want to be careful about inflation if it ever shows up. Volatility, well, that's here. So today, there's an urgency around these things. So now it's how do you better diversify your portfolio? But even within that, are you protecting your portfolio? Are you driving for yield? Are you trying to protect your principal? Are you bringing in guaranteed income into your portfolios? So again, there's no kind of one particular scenario. It's a question of how do we customize and tailor the outcomes for our clients?
What's happened over the years, though, I find it, even with my own investments, is that a lot of the times you try to get into those markets that have lagged behind, but then they never actually materialize, which we've seen, for example, with emerging markets, with Chinese stocks. It's really taken a very long time for that upside to come. Do you make the turn now, or do you still wait it out?
No, look, I think you still wait it out. For us, it's always been about staying invested. And even though these markets have gone up, we've all have seen correlations go to one. So you've witnessed what can happen with volatility, and you look at ahead and you say, well, yeah, there's a lot of disruptions that can happen. There's policy mistakes that can happen. How do you position yourself for that? And again, it depends on where you are, what you're trying to achieve, and again, what solutions you deploy. And technology is playing a big role in that, right? In terms of how you get access to more of these capabilities, how they get delivered. You're seeing more around tokenization. All of that is about trying to drive more liquidity and the ability to move assets around more freely.
What are these tokenization opportunities? How much yield do you think we can glean from that?
Yeah, we're in the very early stages, right? But the way I think about digital assets and tokenization, again, BNY has been at the forefront of this. I think in North America alone, we custody, I want to say, over 80% of the digital assets that are out there. And really what it's lending to, it's liquidity. Again, it's that ability of moving assets around. It's not the T+1, but it's the T+5 minutes. And it's the ability to earn a yield on that. So again, I go back to the world and people needing more solutions and ability to get at it. Technology is going to play a big part. So it's not so much anymore do you have access to that particular bond fund or equity capability. It's about how you're bringing it together and how that technology is able to deliver it.
Talk to us as well. I mean, you highlighted some of the potential hedges for inflation if it comes back against the backdrop of these tariff risks, fiscal easing. How do you see gold, for example?
Look, I see gold the same way I would see real estate or I would see farmland or private credit. Again, you look at your portfolio holistically and say these different asset classes provide a certain correlation characteristic. Again, in some cases it might be a yield play. Some cases it might be an inflation play. Today is really about how do you bring that entire solution, right? We have BNY Advisors, for example, our OCIO. A lot of it is how do we construct as much customized or different solutions depending on where you are in your life cycle, where you are in your career, or again, what are the outcomes you're trying to achieve.
Does Japan play a big factor there? Because you keep talking about correlation, and of course, the Bank of Japan here is one that's going against a broader trend of easing.
Yeah, I think Japan plays a big part here. And what's interesting about Japan now, right? We've seen going after almost 30 years of a deflationary environment, going to more of a constructive, more inflationary, concerns. That's now, and the government's incentivizing people to protect their wealth. Now, again, when you think about correlated assets, broadly in a developed economy like Japan, this is a very investable region. So what you're seeing is there's going to be more access, there's capital being kind of driven here. As asset managers, we're looking and saying, okay, this is interesting. You're going to move to from such a high saving environment to having more investment in the area. All of that and those capital flows are going to be very positive for this economy. So again, this has been a long time coming here, but it's something where we, especially all in the U.S., see tremendous opportunities in Japan.
Yeah, it's been very popular to invest through NISA, right, the individual savings account. But I wonder how the Japanese yen plays into that, because a lot of the households here feel pretty poor at the moment.
Yeah, well, again, it's interesting, right? And that's too dissimilar from the U.S., where if you look at the Japanese economy, well, wages are up, consumer spending is very strong, CapEx is also doing well. So again, the fundamentals are there, and you're seeing more freedom and encouragement of more investment. Those are all positives. Yet there is an inflationary environment, just like in the U.S. There's fiscal and monetary policies that are being concerned. So then the uncertainty here, again, it's the same story. On one end, you can look at the fundamentals, things look really good. You look out into the future and say, is this easing policy a good thing? What's going to happen over the long term? So again, that uncertainty is at a global high level.
Very much so in China, especially with the real estate sector not necessarily getting any better. Is FOMO enough to continue investing in that market?
Yeah, I think that market, is a little bit more unique, and obviously, the real estate values increasing in China again was something more unique to the situation in China. But China is an important component to the global economy, right? So again, I look at things from the long term. I look at it from a broader portfolio construction, and the idea of we want things to be constructive in China.
So you advise to actually have some of those Chinese assets in the portfolios of your clients?
Well, I think some of our clients cannot get access to those. To those investments. In other cases, we are, our firm participates in the ADR market. But again, I don't sit here and in particular kind of say any one bet here. It's all about kind of the solution and the broader portfolio construction behind it.
Jose Minaya, really good to have you here in Tokyo, Global Head of Investments and Wealth at BNY. Thank you.
Thank you.
And we want to turn to our other top story, because tensions between the U.S. and South Korea after the immigration raid on Hyundai are continuing to rise. CEO Jose Munoz has told Bloomberg that the construction on the Hyundai Motor LG battery plant in Georgia is now facing months of delays. Bloomberg Seoul Bureau Editor Denny Thomas joins us now. And Denny, this is not necessarily surprising, is it?
No, definitely. I think it's exactly a week that the raids happened, and from that get-go, the construction is halted. And we also know that LG, which is a partner in that particular joint venture, they have also had construction hit. So overall, this is along the lines we expected. But I think there is some positives also coming out. We clearly see the visa issue getting discussed and some clarity emerging. We saw Commerce Secretary Lutnick saying that there will be some kind of a discussion around what kind of visas can be issued. So I know the price South Korea paid is pretty high for these issues, but it's clearly getting to a position where people recognize that you need top-tier technicians and engineers to be on the ground to do these jobs, for which we need proper documents. I think that resolution is a kind of a positive sign in this whole bleak situation.
As we wait for a form of resolution, though, we're hearing how the South Korean president not really mincing his words. He also had a warning for Washington in his speech marking his 100th day in office. Let's take a listen.
사실은 당황스럽죠.
To be honest, it's baffling. But I think this also reflects some cultural differences between South Korea and the United States. This could probably have a significant impact on future direct investments in the U.S. Therefore, we are negotiating with the U.S. to ensure that visa issuance related to such investments is handled properly, whether by securing more visas or creating new types.
Danny, help us separate perhaps the rhetoric to the domestic audience and the implications, what this will actually mean for South Korean investments into the U.S.
So clearly, Lee Jae-min has tried to, balance out the two constituencies, but he's clearly made the aspect of risk to the investments pretty strongly. And I think in that sense, it was much more kind of a stronger comment that what he's made, clearly outlining that these kind of issues he's baffled himself, but at the same time he's saying that if this is not resolved to the satisfaction of every party involved, I mean this could have pretty much implications on how much money South Koreans can invest in US.
We'll continue to watch that developing story. Danny Thomas, Bloomberg Seoul Bureau Editor there. And the other stories that we're watching at the moment, we continue to watch the tech sector with shares of Paramount Skydance closing higher in the U.S. The studio is set to be preparing for a bid for rival Warner Brothers Discovery. The Wall Street Journal earlier reported the mostly cash offer will be for the entire firm. The paper says that the Paramount offer is being backed by the Ellison family. A merger would shrink Hollywood's legacy studios to 4 from 5 and mark the biggest consolidation since Disney's $71 billion takeover of Fox in 2019. Adobe shares rose after the bell after the firm gave a strong quarterly revenue outlook. Sales will come in around $6.08 billion to $6.13 billion for the third quarter, beating estimates. The move suggests a payoff from its investment in AI features. Adobe has worked to weave artificial intelligence features into the company's industry standard products, such as Photoshop.
And Shery, checking some of the stocks to watch when trade opens in Korea and Japan shortly. We're watching some of these memory chip makers in Asia following the gains by Micron in the U.S. session. Analysts have touted the company's growth potential in the data center market where AI services were stoked and have stoked demand. And some say the NAND market has been left behind by the AI rally. Is that a trade that's been overlooked, especially with some of these notes coming out from Citi and Morgan Stanley, for us to take a closer look at that? We'll have more ahead on the Asia trade. This is Bloomberg.
Different factors pushing and pulling the market, as we're saying. On the one hand, we have the surplus emerging in the markets that has so far been absorbed by Chinese stockpiling and inventories elsewhere. But we're also seeing the risk to supply from increased sanctions on Russia and Iran. We're seeing increased tensions in the Middle East at the moment between Israel, Iran, and now with an attack on Qatar. We're also seeing new sanctions on Russia and attacks on infrastructure there. So this is sort of supporting the market at the current moment.
And that dynamic really between the geopolitics that the IEA Oil Industry and Markets Division head Torio Bosoni talks about, plus, of course, the surplus outlook is what's leading to oil prices really staying between the $62, $67 per barrel level, really trapped around that range for quite a while, since the beginning of August or so. And we continue, of course, to watch that supply dynamic because the IEA just announced that we might see even larger record oil surplus next year from OPEC Plus if it continues to revive production and also rival countries continue to supply the markets as well, Avril.
Yeah, and Shery, in terms of the geopolitical risk premium, it's interesting because we did see yesterday that Russian incursion of Polish airspace, but market seems to have been shrugging that off. Meantime, Bloomberg has learned NATO is preparing a defensive military measure after a Russian drone incursion in Poland, and the source says the move is to strengthen deterrence across the alliance's eastern flank. They say there will also be a political response. Meanwhile, President Trump says the breach could have been a mistake and expressed his frustration with the incident that has alarmed Warsaw and other NATO allies.
Could have been a mistake. Could have been a mistake. But regardless, I'm not happy about anything having to do with that whole situation. But hopefully it's going to come to an end.
Germany is said to have decided to back a France-led proposal for a two-state solution to the Israeli-Palestinian conflict. Sources say Berlin will support a UN resolution that endorses the creation of a Palestinian state, as well as the right of return for refugees. But unlike France and the UK, they say Berlin doesn't plan to Palestinian statehood now. Shery.
We're also following Brazil's Supreme Court sentencing former President Jair Bolsonaro to 27 years and 3 months in prison. That's for plotting a coup after his 2022 election defeat. And of course, we've been watching this very closely on global news as well, given that President Trump threatened the 50% tariffs on Brazilian goods and framed that with the Bolsonaro trial as a witch hunt. Let's bring in Bloomberg political reporter Daniel Carvalho. Daniel, so this was a pretty much expected decision, but walk us through the rationale of why the Supreme Court justices got here.
Hello, thank you for having me. Well, it was nearly 2 weeks of trial with votes that lasted 4 hours. And here, unlike in other countries, the trials are broadcast live on television, so we are able to follow everything. According to the charges brought by the Office of the Prosecutor General, the attempt of coup began back in 2021 when Bolsonaro was still president. The indictment states that Bolsonaro led a criminal organization to remain in power and later to prevent the continuation of current President Luiz Inácio Lula da Silva, who defeated him in the 2022 election. Bolsonaro's plan, according to the prosecution, included the assassination of Lula, his vice president Geraldo Alckmin, and the Supreme Court Justice Alexandre de Moraes, who was overseeing the case.
Daniel, what are the implications domestically for Brazil, as well as the global implications?
Yeah, well, today this ruling was highly anticipated by both markets and politicians from both sides, and because they expected now that Bolsonaro will finally announce whom he will support in next year's presidential election. We will have elections again in October 2026. The front runner is São Paulo Governor Tarcísio de Freitas, the front runner in the conservative field, because he's seen like a market-friendly politician. But Bolsonaro may also choose to pass the torch to a family member. On the international front, Brazil is bracing for new sanctions from the United States. As you said before, Brazil was already slapped by 50% tariffs on many of our goods that we export to the United States. There were also sanctions against Supreme Court justice. And there is also a trade investigation that is open in the United States. Brazilian officials, they don't know what can come, but they know something will come to against Brazil. President Trump, he was informed of the result of the trial, and he said that. That's very much likely they tried to do with me, he said earlier today at the White House. And Secretary of State Marco Rubio, he tweeted a message saying the United States will respond accordingly to this witch hunt.
Yeah, even President Lula saying that he doesn't necessarily fear U.S. sanctions over the Bolsonaro trial. Of course, we have seen the real rallying about 15% this year, so we'll see the reaction from President Trump and what that could mean for Brazilian assets as well. Bloomberg political reporter Daniel Carvalho there with the latest coming to us from Brazil. We have more ahead on the Asia trade. This is Bloomberg. We're just minutes away from the market opens across Japan, South Korea, and Australia as well. And we're looking at upside with futures pointing higher for Nikkei stocks. We had already finished at record highs. The yen trading within the narrow range against the U.S. dollar in the overnight session, with inflation in the U.S. Relatively tame. And of course, we continue to watch the labor market in the U.S. for indications of what the Fed will do next week. The Bank of Japan also announces its policy decision next week. Not much expected from the BOJ, but we continue to watch the implications for JGBs as we're also headed towards a 20-year bond sale, not to mention a 40-year debt auction at the end of the month. Sydney futures pointing to the upside of 0.4%. This, of course, as we're also watching for the pressure on the Aussie dollar, or a little bit of a boost on the Aussie dollar, given, of course, the soft U.S. dollar on the other side of that trade. We had seen U.S. futures at the moment not doing much, but after stocks rose to a record high, we continue to see that broad lift, especially with value stocks leading the way, and Avril bank shares also powering the Dow higher on that economic data out of the U.S. and expectations of rate cuts to come.
Yeah, that's really what's been driving the move in treasuries overnight. We saw the 10-year yield moving towards that 402 handle in the Asia session, and futures, though, pointing to a bit of downside. But look at the way the developed markets bonds are faring on the 10-year in Australia and New Zealand. You see that pick up there, and it's worth noting as well that this is coming against the backdrop of that curve steepener trade. Maybe that's something that has peaked. Markets open next in Sydney, Seoul, and Tokyo. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens after a rally on Wall Street. The Avril eco data in the U.S. pointing to perhaps a sure thing when it comes to a Fed rate cut next week. Of course, we have seen the jobless claims numbers jumping to the highest levels in 4 years, really taking that focus away perhaps from inflation data that came in pretty tame.
Yeah, and markets now pricing in that 25 as a lock, potentially as well in October and December, a form of rate cut from the Federal Reserve, even with these geopolitical risks at play, Shery.
Which is really interesting because the jobless claims numbers are pretty noisy data set. But given that we got the downward revision when it comes to annual employment this week, not to mention last week's poor performance when it came to the non-farm payrolls, the focus has now intensified on the labor market in the U.S. Take a look at how we're opening in the Japanese session, because we do have the Bank of Japan policy decision next week as well. The Nikkei still at record highs. The TOPIX also gaining 0.6%. The Japanese yen pretty range bound at the moment. We did see some losses in the overnight session being recouped, but still lagging behind G10 peers. This at a time, as I mentioned, we're coming towards a BOJ policy decision. No change expected then, but the expectation is that the BOJ will start hiking rates again this year. We have had economists surveyed by Bloomberg seeing those rate hikes, potentially the first to come in October. Take a look at the 10-year yield at that 158 level. JGB's market in focus as well, because we have a 20-year bond sale next week as well. Take a look at how South Korea is opening. We have seen a risk rally for the Kospi this entire year. We're plus 30% or so, and the Kospi at record highs in today's session as well. The Korean won holding at 13.90 against the U.S. dollar as we continue to see that risk rally. The Korean won also a little bit stronger against the dollar, April.
Yeah, as we track the moves in the dollar and that slide overnight, we're seeing the Aussie ticking up a little. It's also how there's this tailwind because of the U.S. data for the Asia Pacific. And does that mean as well that some of these cyclical rich benchmarks or markets in the region can do well, can perform a bit better with the stock rally broadening out? Today, we're seeing the Australian gauge adding about 0.5%. Of course, it's also been about what what we're seeing in the curve. And we did see overnight U.S. Treasuries taking higher, particularly on the 10 years. We saw that nudging towards 402. It's hovering towards the 403 level at the moment. Are we seeing a sort of peak in that really popular curve steepener trade? Of course, taking a look at how oil prices are faring, the IEA did up its projection for a record surplus next year, even with these geopolitical risks in the backdrop. You're seeing oil, perhaps on the U.S. data, the lack of demand, it's pulling towards the 66 handle. Joining us now is Junpei Liu for an analysis, co-founder and lead portfolio manager at 10Cap. Junpei, great to see you. We're focused on the Fed for now. There are a lot of other things in the background as well, but talk to us first about what the data, the Fed path is going to mean for Asia.
Yeah, look, thank you so much for having me. So in terms of Fed, we expect, or the market is absolutely expecting a cut next, that's coming up. Our view is about 25 basis points, and that's positive for the market and for the Asian market in particular as well. Look, we think for the rest of the year and potentially into next year, there's something up to 6 rate cuts there in the U.S. So that will continue to drive, confidence boost for the market, valuation support, and then you'll see continuation of more allocation, more capital flow into Asia. It's all very, very positive.
Where in Asia are you particularly positive about, Junpei?
Look, actually, there are lots of places actually to be positive about. Well, first of all, we look at my home, city, Australia. We do think with the rate cuts here in Australia, we actually in the middle of the rate cut, and then we got more to go as well towards the end of the year. We're already seeing the cyclical improvement in many of the sectors already, such as housing-related, consumer-related, and then we're seeing the rate beneficiaries of property sector doing very well, and we think that will continue. We see markets like Asian, China markets, certainly confidence has been quite strong. And we do think, even though we don't have a significant stimulus and the others to pull through, but we do think the targeted stimulus and also the economy itself is holding up pretty well. So we think that market will continue to be well supported. And then that flows on to the rest of the, the Asian markets, particularly some of the, tech-heavy sector as a country as well, because of the AI thematic continue to be very strong. There is, of course, you have your tail risk of what's going to happen to the trade tariff and all that. That is going to continue to play in the background. The market may become a bit volatile with the headline, but net-net, I think for the time being, it looks pretty positive for the markets.
And you talked about the AI theme, and in today's session, we're seeing that blow up when it comes to the likes of Samsung, SK Hynix as well. In the overnight session, we had that positive sentiment over Micron, and also speculation that we might be seeing more demand when it comes to NAND and DRAM from the hyperscalers. So is this narrative over infrastructure build-out still strong enough to continue to lead these gains? Because we have already seen a massive rally this year.
Absolutely. I absolutely believe the thematic is going to continue. And in particular, the infrastructure that you talked to that's necessary for the further expansion of AI. And these infrastructure will have already continued to receive a lot of investment. And more tech companies that we heard from in the last few months are investing more, accelerating their spend in that space. So we don't think that thematic is turning away. And also what's interesting is between, the tech infrastructure between the developed world and also Asia, if it's China-centric, we almost perhaps will have a race to who's going to have more of the investment, and then a lot of those infrastructure actually has to be duplicated. They could, because the crossover between them will be quite difficult. So we do think there's a lot of opportunity in that space. But aside from that, we're also seeing a lot of opportunities now that with the application of AI, right? So all these software businesses that's kind of play into that thematic, we do feel quite excited. Every portfolio should have some of those companies, within the portfolio.
Yeah, China really trying to get ahead in that race when it comes to those applications over AI as well. Where do you see the most compelling names across the Chinese markets?
Look, I think across the Chinese market, certainly there's the tech side is very, very exciting, and there's a lot of investment heading into it. One of the old sayings that as an investor into the Chinese market, you kind of want to follow where the government is putting their money. So that's a very key thematic. However, on the other side, another exciting sort of key development in the last 6 months or so is that we are seeing the improvement in the Chinese consumer after many targeted sort of stimulus, and they have turned around. Chinese market is actually a very clear indicator how that confidence is improving. So we do think you do want to buy into the consumer stocks. Next few years, it will be that significant catch up in what the consumer would have spent in the last few years. So I think that sector will do incredibly well. Travel, consumer, retail is all going to be the key sector. Housing is still pretty tough. Look, but it seems to be finding the bottom. But it's the tech, it's the consumer that we think will drive a lot of return.
And speaking of tech, the consumer, we're also seeing Nvidia supplier SK Hynix jumping 5% in trade after it announced this high bandwidth memory for development completion. So to your point about how this has all been unlocked, there's a lot more to go. But I wonder, given some of the tail risks that you've been highlighting, how do you hedge the tech trade that has already been doing so well?
I think that's the challenging part of it. So I think they've done incredibly well. Every portfolio should have some of those tech businesses. However, I do believe in the next 12 months, your return will come from some of the cyclical sort of areas, or cyclical area as in, businesses that will benefit from an upswing in economic activities, the beneficiary to falling rates and the like. So these companies will benefit more. And then these will be smaller businesses rather than larger cap companies. So you will see a broadening of the bull market, and then more money flowing probably out of some of those tech winners into those cyclical winners. But it doesn't mean the tech names is going to be sold off. It just simply perhaps won't go up as much as the rest of them.
Okay, that's fair. Talk to us as well about, as we try to pick out the winners and losers in AI, sectors that potentially have been overlooked, right? We've been seeing NAN this week. It's captured a lot of attention. How do you play that?
I think it is quite tricky in that space, especially some of the softwares we talk to, because they're developing so fast at the moment, and to find the winner itself. Right now, we still deploy or have a lot of investment sitting within the hardware or sitting within the infrastructure place, because we see real demand, and then essentially acceleration in demand, and then the sort of supply just not enough and just couldn't catch up with the demand. And however, the software side, it is a little bit more tricky. It's almost you find a winner and you do want to stay with them, while keeping abreast to see what else is happening in the space.
Jeanne, you co-founder and lead portfolio manager at 10Cap. Really good to have you with us. We are now getting breaking news out of OpenAI and Microsoft at the moment. OpenAI and Nvidia, in fact, now announcing billions of dollars in UK data center projects. We will get you the latest as we get it, but right now we're seeing some breaking headlines on the terminal saying that OpenAI and Nvidia CEOs will visit the UK next week at the same time as President Trump. They're teaming up with the UK's N-Scale on data center push, so we'll continue to bring you the latest as we get them. But it's really been about the tech story across the Asian session as well, because remember, overnight we had that surge in Micron with analysts pretty optimistic about that company, and this coming at a time when we're seeing, of course, the chip makers really take that attention as DRAM and NAND demand could continue to rise from hyperscalers. Not to mention that SK Hynix had some idiosyncratic news this morning announcing that they completed the development and finished preparation of HBM4 mass production for the world's first. So this really leading to SK Hynix gaining more than 4% at the moment. But we'll continue to bring you more on that story. But OpenAI and Nvidia, again, their CEOs will be announcing that UK data center investments teaming up with N-Scale Global Holdings on the project. That's a London-based company. They're going to spend billions of dollars as part of the plant. And the American companies are also expected to announce tens of billions of dollars in other UK investments when President Trump visits the UK next week. We have more ahead on the Asia trade. This is Bloomberg.
A day after the fatal shooting of conservative activist Charlie Kirk, a manhunt is still underway. The FBI has released photos of a person of interest to the public. Meanwhile, President Trump says he'll attend Kirk's funeral, which is being planned for next week, and also intends to posthumously honor him with the country's highest civilian award.
I'm pleased to announce that I will soon be awarding Charlie Kirk posthumously the Presidential Medal of Freedom.
Let's bring in Bloomberg's news desk editor, Jill Deesis. So, Jill, the manhunt, the investigation, they continue. What more do we know at this point?
Well, Avril, we do know that there's a person of interest in this case that it appears the FBI is looking for. They've actually released a couple of photos that appear to be from surveillance footage. So this shows a person wearing a cap as well as sunglasses. The authorities have described this person as being, about college age, or at least was able to blend into the college campus where the shooting occurred, Utah Valley University. At this point, they're also offering a reward of up to $100,000 for information related to the killing. And they do say that they've also found what they believe may be the weapon used in the killing. So this was a high-powered bolt-action rifle that they found in a wooded area near the university. They also that is being examined at the FBI's laboratory. And then they also said that they found things including footprints or sort of foot impressions as well as palm impressions. So at this point, again, still looking for this person of interest. They also have this evidence that they're examining. I would point out, though, that this has obviously been, sort of a really messy, sort of investigation, at least, publicly so far, and that there were a couple of people that were taken into custody yesterday. They were obviously released. This is the latest, though, that does include those specific images, including, this additional information about a potential murder weapon. So that's at least where we're at in terms of trying to find this particular subject.
Yeah, Bloomberg's Jill Deesis is there with the latest on the ongoing manhunt in the U.S. Now, the top global headlines that we're following as well. Former Brazilian President Jair Bolsonaro has been sentenced to 27 years and 3 months in prison. That's for plotting a coup after his 2022 election defeat. This makes Bolsonaro the first former president convicted of such a crime in the country. His lawyers are expected to appeal his sentence. The U.S. has warned it will react accordingly to what they call a witch hunt. President Trump has asked a federal appeals court to pause a lower court decision blocking his ouster of Fed Governor Lisa Cook. The request for a stay order would likely allow the firing to take effect before the appeal is formally heard. The administration wants a ruling by Monday, the day before the Fed board starts meeting, to vote whether to lower interest rates. If the request is denied, Trump is likely to go to the Supreme Court.
And staying on trade, Commerce Secretary Howard Lutnick says the U.S. is on track for new trade deals with Taiwan and Switzerland. He added Washington will sort one out with India if it halts Russian oil purchases. He confirmed South Korea has reached an agreement but has not yet signed it. Lutnick's comments mark a more upbeat view on President Trump's trade agenda as tariffs weigh on firms from Swiss watchmakers to Taiwan's chip makers. And Mexican President Claudia Sheinbaum is defending her push to impose new tariffs on Chinese imports, insisting the move is to protect domestic industries. China warned Mexico to think twice before hiking duties, accusing it of trying to appease the U.S. For more, let's bring in our chief North Asia correspondent, Stephen Engel. So, Steve, walk us through the nuts and bolts of this spat between China and Mexico now.
Yeah, so the bigger picture, obviously, is the U.S.-China relationship. And I might add, let me throw this out right now. In the last half hour or so, we did get news, just following up on that Lutnick story as well. We're hearing from Reuters news agency citing the Treasury Department that Scott Bessent is going to be meeting with his Chinese counterpart, by the way, next week in Spain, He Lifeng, to basically accelerate higher-level trade talks. So that's the backdrop, obviously. But again, this story with Mexico and China is sort of mushrooming as well, because Claudia Sheinbaum has talked about proposing upwards of 50% tariff on Chinese goods into Mexico. And we do know that in the first half of this year, Chinese EVs into Mexico rose by nearly a quarter, by almost 25%, to overtake Russia as the biggest single destination for Chinese EVs. And Sheinbaum and her economy minister have talked about the distortions that the flood of Chinese exports and imports into Mexico are having on the Mexican economy. That's Sheinbaum's justification for raising tariffs on upwards of 1,400 categories of goods from mostly Asian nations that don't have trade pacts with Mexico. So we're talking China, South Korea, India, among others. So again, yeah, Beijing is not happy with that. They said think hard and fast about this. And again, threatening some sort of retaliation if indeed those kind of tariffs go forward. Sheinbaum, by the way, is saying, again, this is because of distortions to the local economy, protecting the local economy. It is not because of pressure from Donald Trump's administration at a time when U.S. and Mexican officials are negotiating right now.
And Beijing, of course, has very different levels of reactions to these sort of diplomatic issues, right? Are we expecting them to take stronger action than just the rhetoric?
Yes, but also be careful how vociferous you are in your condemnation of Mexico, because believe me, other nations who are also feeling the wave of cheaper Chinese imports might be looking at the Mexican situation as a good case study on how to respond to the Chinese. So again, China has to tread carefully as well, because they've made good inroads into the Mexican economy, so close to the U.S. economy, no doubt. But again, this is the statement from the Ministry of Commerce. On the one hand saying, urging Mexico to take the utmost caution and think twice. And again, at a time when tariff abuses by the U.S. have triggered widespread opposition across the globe, any unilateral tariff move by Mexico, even if taken within the WTO framework, would be regarded as an act of appeasement and compromise towards unilateral bullying. So again, Ministry of Commerce in Beijing taking the rare step and mentioning the United States by name, and again, reiterating that bullying term.
Our Chief North Asia correspondent, Stephen Engel there. We do have more ahead on the Asia trade. This is Bloomberg. Right, we're watching the tech rally across Asia, really following that Wall Street gains over the Micron positive sentiment, not to mention, of course, we have news about OpenAI and partnerships with Microsoft. We also had news about OpenAI and Nvidia investing in the UK. Also, idiosyncratic news about SK Hynix. So let's just break all of this down with our tech correspondent for Asia, Annabelle Drulers, because, Belle, there's a million stories that we need to follow right now with speculation that there will be more infrastructure investments worldwide. But just walk us through what we're watching today.
Yeah, this has actually been a really busy morning. So I'll just kick off with that story you broke there around this expectation that we're going to have the likes of Nvidia, OpenAI traveling to the UK next week. As you said, there's that expectation we're going to be getting some really big data center announcements and investments into the UK as well. So what we understand is that both of those companies are part of a broader delegation of US executives, but going to be teaming up with a London-based data center business called Nscale Global Holdings. And so they'll be looking at that project together. It does does really track what we know the UK wants to see. We've had Prime Minister Keir Starmer, for instance, looking at plans to turbocharge AI investment into data centres and chips. And we know, of course, OpenAI wants to make more investments into Europe as well, even though it faces a lot more scrutiny than what it does back in Europe. But still, I mean, it's going to be something really closer to track, because you can see that sort of instant reaction we've got this morning in the memory chip names. I mean, we think about data centers, we think first about AI chips, but actually there's a lot of other non-AI chips that are essential as well to the build out of data centers. And you are seeing that sort of need for these products as well, really reflected in the rally we've seen in names like Kioxia, for instance, in Japan.
Belle, I wanted to get your thoughts on SK Hynix, because now we're hearing about the high bandwidth being at the fourth, stage of development, high bandwidth memory 4. But talk to us as well about Microsoft as well as OpenAI, because there are developments surrounding their partnership there as well.
Yeah, I think we can talk about SK Hynix first. I mean, this is a really significant development as well for the business. So essentially, HBM, we know high bandwidth memory. This is also essential for the production of AI chips. But what the company is saying this morning is that they've managed to produce HBM4, and that is a new milestone for the business. And they're saying that they're actually able to now roll this out, and they're starting mass production. Now, HBM4, it's a follow-up from HBM3E. That was what we last had major production of, HBM3E. Now we're moving to HBM4. As I said, it's the next iteration, and it also allows more sort of significant architectural changes to the underlying technology as well. So it gives us that next performance computing. Well, that's what the company is saying. So again, big milestone for SK Hynix that they're reporting this morning in an emailed statement.
Belle, thanks so much for running us through all these tech developments. Asia Tech correspondent Annabelle Jolas. We have more ahead on the Asia trade. This is Bloomberg. Let's take a look at how Korean assets are faring. Of course, you had that tailwind from the Federal Reserve rate cut bets following U.S. data. But in South Korean markets, it's also about these policy reforms that are underway, and that has helped to unlock. Look at how the Kospi is faring after already reaching fresh records earlier in the week, 0.6% higher. A lot of this has to do with tech-related names. The Kosdaq is adding on 1%. You're seeing the Korean won at around the 13.90 handle. But of course, trying to unpack the Korean relations with the U.S. as well after these immigration raids this week at a Hyundai plant. And we're since hearing that in an interview with Bloomberg News that the Hyundai CEO, Jose Munoz, actually revealed that construction on the Hyundai Motor LG battery plant in Georgia is now facing months of delays. And Munoz said that the setback is a direct result of a labor shortage that was triggered by a recent raid by these U.S. immigration authorities. Bloomberg's Korea economy and government reporter Hee Soo Lee joins us now for more. Hee Soo, let's start with the detention of the South Korean workers in the U.S. Now we're hearing that, they could be returned home soon.
Yeah, right. So most of the workers have not been released. More than 300 people were taken into custody during last week's raid at the Hyundai LG battery plant in Georgia. They were freed early Thursday local time and boarded a charter plane back to Seoul. President Lee Jae-myung said yesterday that they're expected to arrive Friday afternoon. So it's going to be today. Images of the workers shackled sparked outrage in Korea, and the president described the whole situation as baffling. He stressed that these were skilled technicians sent on short-term assignments, not permanent immigrants. So the latest is they're on their way home, but the incident has left lingering concerns.
Yeah, so actually take a listen to what President Lee Jae-myung actually had to say.
사실은 당황스럽죠.
To be honest, it's baffling. But I think this also reflects some cultural differences between South Korea and the United States. This could probably have a significant impact on future direct investments in the U.S. Therefore, we are negotiating with the U.S. to ensure that visa issuance related to such investments is handled properly, whether by securing more visas or creating new types.
He's such a headache for Korean companies that have pledged billions of dollars of investments into the U.S. Right. It seems that we have lost Hee-soo, who is joining us from Seoul. She's the Korea economy and government reporter, and she was telling us about the investments that are now in jeopardy, given, of course, the immigration raid on that Hyundai and LG plant in Georgia, and perhaps the uncertainty when it comes to some of those Korean businesses, when it comes to putting billions of dollars of investments at work. Actually, take a look at this graph, because we're talking about $350 billion already pledged by South Korea. I understand that there's also separate billions of dollars of funds pledged by private companies, $550 billion also coming from Japan and the likes of the UAE, Qatar, more than $1 trillion each. But given the uncertainty over perhaps the U.S. immigration picture, visa issues as well, what could this mean for these investments going into the U.S.? Let's bring in Bloomberg political contributor Jeanne Zaino. She's also a visiting fellow at Harvard Kennedy School's Ash Center. Jeanne, always really good to have you with us. Are we seeing this divergence and discrepancy when it comes to how the Trump administration handles these immigration visa issues and also requesting more investments for the United States?
Yeah, we absolutely are. And, you know, I'm just listening to the clip you played of the president of South Korea, and the word he used is the one that we're hearing over here a lot. It is absolutely baffling. The raid is the largest we've ever seen in American history in a workplace. And it was a raid 10 days after his visit to the United States and the call from the Trump administration to invest billions of dollars to do exactly what they were doing in that plant, which makes the raid baffling. And then just to add to that, what you were just talking about, which is the treatment of the people during the raid, the shackling, the way in which they had so much force on the ground for people who are simply doing their jobs. And so it is from every sort of perspective part of a nationwide crackdown on immigration here, but baffling against a very close ally in South Korea. And to your point, a contradiction when, as it pertains to Trump's stated goal of reshoring and building manufacturing and pursuing foreign investments, and the immigration policy that he has been working with from his first to now his second term that has become increasingly militarized.
The outrage from the American public, though, also comes that these workers, foreign workers, are working in their country without proper authorization, right? Is there an understanding among the American public that visa issues need to be sorted for skilled workers to come in?
You know, I don't think there's a good deal of understanding of the process, but the process is broken. It has been broken for a long time. I think there is outrage amongst the unions as it pertains to bringing over workers. But the reality is the jobs, plural, that those workers were doing would take 3 to 5 years of training for American workers to do. So the practice has long been to bring over skilled workers and train American workers. Even the president has been, cognizant of that reality. But I do think the unions get frustrated as they get concerned about jobs being taken. But the fact is we don't have the skills over here for the workers to do those jobs. And the visa process is broken. Moreover, it is the Trump administration that capped the H-1B visas, making it almost impossible to bring over the skilled workers they need. And just from a political perspective, the concern I think many of us have over here is that the administration is at odds with itself. It is confused. It is pursuing multiple tracks, and they do not run down the same lanes together in a coherent way. And we are seeing that confusion played out as it pertains to incredibly important issues like the treatment of these workers and the ability to reshore.
Given the outrage in Korea, how do you think this is going to affect relations with Seoul at the time where, as you say, the Trump administration does need this longtime ally as it competes with China?
Yeah, I mean, this is deeply concerning in many ways. I think this raid is one example. The tariffs scheme that has been, in practice now since Donald Trump's Liberation Day, that has really alienated allies around the world is deeply concerning, or should be concerning from a long-term perspective. And so, the reality is that the Trump administration is alienating friends that we need to do the very thing they say they want to do, which is to confront China. So it doesn't make a good deal of sense to those of us who work in this area and think about foreign policy, national security, economic security a good deal. And I do think Americans may not be the top of mind foreign alliances as much as things like the economy and inflation. But it certainly will be as we move forward. And the allies we have counted on, not just South Korea, but you look at what's happened with India, for instance, in just the last few weeks or month, and the list goes on and on. That is deeply, deeply troubling because it impacts our national and economic security in the long term.
I guess to your point, as you're alluding to, it also begs the question for many of these U.S. partners of how reliable Washington is as an ally. Do you think that affects the calculus for these countries in tariff negotiations going forward?
It absolutely does. I mean, we have a bit of chaos over here as it pertains to the tariffs because we had a recent court decision putting a hold on them. So they remain in place, but the court has knocked them down. So it's a confusing time if you're negotiating, not to mention it's difficult to trust when you are told that the goal is to reduce your tariffs by investing, and you invest, and then you see pictures like this. So I think if you're a foreign investor, you've got to be very concerned. If you're an ally, you've got to be very concerned. And of course, the reality is there is a good deal of a sense of betrayal and humiliation that in foreign policy is always, always something that you need to avoid. And so for the United States and people who care about alliances, this is troubling, but the Trump administration and Donald Trump himself has a very different view of these things. And you see this kind of contradiction in so many areas in which he works. Just to give you one example, this is a president who claims that he is he is the road to peace and that he has resolved 7 wars. And yet they attacked and they struck down a boat just off of Venezuela the other day. Those contradictory messages, are things that we are hearing an enormous amount about over here, and people are concerned.
You mentioned Venezuela, and of course, the immigration issue with Latin America has also been huge from the moment that President Trump took office, right? The fact remains that these businesses want to go into the U.S., invest, and the practical matter is these visas and being allowed to operate with skilled workers. But immigration is a political matter in the U.S. How do these two really combine, and what's the path forward then when, in order to bring political change in the U.S., there are so many other factors that you need to consider?
Yeah, the change to the immigration system, including the visa system, is going to have to come vis-a-vis Congress. And that is the problem. For all the talk about Donald Trump, and certainly I've spent a good deal of time talking to you guys about Donald Trump, the reality is much of this has to come via congressional legislation and Congress, not just this Congress, but going back many, many years in the United States, has been unable to address the number of problems we have with our immigration system, going back all the way to 2000 with the election of George W. Bush and even before. So I'm talking a long time. And to do these kinds of fixes to the immigration system, which has been broken, it's going to require an act of Congress, not just executive orders by the president. But of course, that is not something we have seen Congress having the will or the ability to do. And hence the frustration on all presidents' parts, including Donald Trump, as to how to move forward on immigration and to do so in a way that allows us to build our manufacturing base and to make sure we maintain our security, both economic and military. It's a real conundrum with the Congress that doesn't seem to be able to pass basic legislation, even, by the way, our budget, let alone immigration, which is much more complicated.
A complex issue. Jeanne, thank you for your insights. Jeanne Sheehan Zaino is Bloomberg political contributor. We'll have more ahead on the Asia trade. This is Bloomberg.
Continue to see record highs across Asia, Japanese and Korean markets. The Kospi up 0.8%. One sector that we're watching is tech. Of course, we have seen the surge from Micron in the overnight session, and more idiosyncratic news like SK Hynix, for example, finishing the preparations for the HBM4 mass production as well. We've also had news about Nvidia investments into the UK, and a lot really moving the broader tech markets, Avril.
Yeah, and indeed, we are seeing these hot themes in tech, from AI to biotech, driving Chinese investors to pour record amounts of cash into locally listed ETFs that track Hong Kong stocks. And analysts say the trend is likely to continue. Our Asia equities reporter, Charlotte Yang, joins us now with more. So, Charlotte, what are the drivers? Talk us through it.
Yeah, so we're seeing a retail surge in China's ETF market, and Hong Kong is at the center of it. So mainland investors have poured over $26 billion this year so far already in those onshore listed ETFs tracking Hong Kong. So what's the lure of it? So one is Hong Kong's equity market has been outperforming that of onshore, but more importantly is the unique thematic stories that Hong Kong's equity market offer. If you think about it, some of those most exciting themes this year in the China market, be it DeepSeek AI or the Chinese EVs going abroad, or the new consumption, the China new consumption, those names favored by Gen Z, as well as innovative drugs. A lot of those companies are only listed in Hong Kong: Alibaba, Xiaomi, PopMart, you name it. So and also the ETF insurers onshore has been really agile. They've been offering a lot of these very specific, targeted, thematic ETF products tracking these specific sectors. So that has been a big allure for these onshore retail investors who like to use these thematic products to go in and out of the sectors pretty quickly. And also, you may also ask, then why do people buy it onshore versus like going to just South Connect? You can also buy ETFs for what? And so accessibility is one thing. A lot of the new investors like to buy ETFs via payment apps like Alipay, which is why that's making a lot of these ETFs really attractive to onshore investors.
And of course, Charlotte, there's also the narrative of perhaps more stimulus to come with help to local governments.
Yeah, so today a big story we're watching is that Chinese government, there's a scoop that based on people familiar with the matter, the Chinese government is asking some state banks as well as policy banks to provide local government support so that they can repay some of those private sector contractors that have been long due payments. So while we're unlikely to see the broader market acted on this because these efforts are quite specific at helping those private sector contractors, and you're looking at many locally small enterprises that might not be even listed. But nonetheless, I think this is a positive gesture to show that Beijing cares about the private sector. They're supporting it. But with that said, investors that hold Chinese banking stocks might be unnerved by this, given that the Chinese, because a lot of details we don't know yet. For example, which banks, how much they have to support, and also how long the initiative is. And the banks are already struggling with profitability pressures, given the state services they have provided over the past years of providing cheap loans.
Yeah, our Asia equities reporter Charlotte Yang there, of course, as we head towards the China market opens in about half an hour. We'll be watching those stimulus themes. We'll also be watching those tech themes that we mentioned around the AI momentum. Now, as more users emerge for AI tools, one area that's being focused on are those that can manipulate existing images without distorting the subjects. Bloomberg Opinion columnist Catherine Thorbeck thinks that the tech has strong revenue-generating potential. She joins us now here with the latest. And Catherine, it's been amazing to see how fake photos can look really real. Is that where the money is?
Right. So the technology has improved significantly in recent weeks with recent updates, but also the consumer demand for these products is very real. You know, there was some data from a VC firm that said almost half of the top 50 generative AI applications by monthly active users was some sort of AI photo or video editing tool. And so I think that shows that consumers are really voting for these products with their time. And, you know, in China especially, I think it's been hard for companies to find sort of a killer AI app. You know, there's an abundance of chatbots, but it's been hard for consumers to really differentiate those, and as a result, it's been harder for companies to make money off of them. But I think it's very possible that we'll end up seeing sort of the killer consumer AI app have to do with photos and not just text. I mean, we saw that with Instagram in the social media space.
Catherine, what exactly makes some of these apps stand out, and how different is that from what's already out there in the market?
Right. So the earlier generation of these AI image tools were really focused on sort of text-to-image models. So you would input a prompt and then get an image back. But they were less good at sort of editing existing photos and sort of these reference image models. But there's been a spate of recent updates led by Google with its very viral Nano Banana image update. And then more recently, ByteDance, Alibaba's QN, and even this Chinese platform Vidu, which I got to try out. And they've just really significantly improved the technology. I mean, you know, it used to be there were sort of tells about AI-generated images, whether that's, you know, sort of a stray sixth finger, but the technology has improved so much. You know, one photo that I was able to generate with very low latency almost immediately was actually a photo of Donald Trump holding up a Labubu doll. And so it was quite shocking to me that I could just do this and do these masterful edits really instantly.
Which is quite scary, and this is why authorities are now starting to look at the risks around it, right? What are some of the challenges going forward for this technology?
Right. So China has been sort of leading the pack here. They've already released regulation that requires all AI-generated content online to be labeled. And I think we will see other jurisdictions follow suit. But I think ultimately, you know, the scale of profitability here will really be determined not just by the tech innovations, but also by how much trust they can really, you know, have with consumers, and also by regulation. So I think that's something to keep an eye on.
Catherine Thorbeck, Bloomberg Opinion columnist, with her latest column that you can watch. You can read OPIN Go is the function. More ahead on the Asia trade. This is Bloomberg.
Let's take a look at how some of the Asia benchmarks are faring about an hour into the session. Of course, we are watching out for the region's gauge potentially hitting the highest level we've seen in years. It's been a pretty strong rally in the past week, took a bit of a breather yesterday, but the U.S. data really just unlocking the further tailwinds on what this means for the Federal Reserve's trajectory. 25 basis points next week, and then potentially as well October and December. So stocks are doing well, catching a bid, but you also have these idiosyncratic bids plays, right? Particularly for AI and tech. The Kospi adding about 0.9% now. Some of the analysts that we've spoken to in this hour also talk about how there's a chance for the stock rally to broaden out. It's not just about tech, cyclicals as well, which could benefit some of these other markets that are heavy on that sector. But Shery, it's really the focus on these tech names.
Yeah, that's propelling, as you say, the Kospi to record highs, the Nikkei record highs, Asia Pacific MSCI 4-year high. But take a look at SK Hynix record high for the stock as well. We have heard that they've finished preparation for their HBM4 mass production, so that would be the world's first. We're watching some gains for Kioxia here in Japan as well. Of course, that's a big NAND name. They focus on flash memory. Samsung Electronics also just broadly semiconductors really gaining ground today. Of course, we had other news around Nvidia, for example, with OpenAI. Their CEO set to announce investments into the UK, not to mention that Nvidia is also, of course, we're watching the developments around the China restrictions as well. We already had a bid overnight with the Micron gain as well on those expectations of more hyperscalers demand for NAND and DRAM as well.
Yeah, and we are also watching some of these Chinese tech names when markets open in the next hour, and they could see a strong finish to the week. A number of tailwinds, things are really falling into place. You have lower U.S. yields, Chinese government support for local governments, and then Alibaba following that successful convertible note issue. So things are really shaping up as well. We'll see how China markets open. That's it for now from the Asia trade. Our markets coverage continues as we look ahead to the start of Chinese trade. The China Show is next. This is Bloomberg.